Forum has ever seen.
Well, good evening. I'm Tom Patterson. I'm the Bradley Professor of Government and the Press here at the Kennedy School. This year, serving also as acting director of the Shorenstein Center on the Press, Politics, and Public Policy. And we're co-sponsoring with the Institute of Politics tonight's forum. I've got a great panel for you tonight. On my immediate left, Jane Bryant Quinn, contributing editor, weekly columnist for Newsweek, earlier and for a decade with CBS News, both evening and morning. And she previously hosted two shows for PBS, Take Charge and Beyond Wall Street. Next to Jane is Floyd Norris. He's the New York Times chief financial correspondent, also writes a weekly column in the paper's financial section. His other stints include two newspapers in our neighborhood, the Manchester American and the Concord Monitor, as well as time with the Associated Press, UPI, and Barron's. Next to Floyd is Ed Glazer, my colleague, Fred and Eleanor Glimp, professor of economics. He directs the Taubman Center for State and Local Government, edits the Quarterly Journal of Economics. And then on the far left, also my colleague, Jeff Frankel, James W. Harpel, professor of capital formation and growth at the Kennedy School. He also directs the program in international finance and macroeconomics at the National Bureau of Economic Research. And among other things, Jeff was in the Clinton administration as a member of the Council of Economic Advisors. And I'd also like to take a moment to recognize Walter Shorenstein, who's here tonight. Walter's generosity enabled the creation of the Shorenstein Center. And Walter is one of those rare donors who keeps on donating. And I'm not talking simply about money, I'm talking about ideas. This forum tonight was Walter's idea. Thank you, Walter. And I should tell the panelists so that they don't think they've driven Walter away. He has to leave at 6:30 to catch a flight. So when he gets up, it's no commentary on you. We're going to talk tonight about financial reporting. There's an ancient Chinese curse that many of you know. May you live in interesting times. And financially speaking, we do. The national debt has increased by nearly 50% in a relatively few years. Consumer debt is high. The US dollar is shrinking. And there's a very large due bill looming around the Medicare, Medicaid, and Social Security programs. Interestingly, the public may have a lot more interest in these kinds of issues than we normally think. The Pew Research Center has been doing national surveys for roughly 20 years. And over the course of those 20 years, one of the questions that has frequently appeared in their surveys is a question about a current news event. And they've asked the American public whether they're paying close attention or not to that news development. And over these 20 years, they've interviewed about 200,000 Americans on this topic, covering 1,300 news stories. And some of the findings are pretty interesting. I don't think it will surprise you that near the bottom of the list is news about other countries, what's happening in other countries that's unrelated for the most part to what's happening here. It might surprise you that also in that bottom tier is celebrity news. So even though the death of Anna Nicole Smith or the breakup some years ago of the Nicole Kidman, Tom Cruise marriage, even though these attract a certain kind of clientele, they don't hold much interest for most Americans. Among the categories in the middle tier is the news out of Washington. And that would include, for example, the appointment of John Roberts to be Chief Justice of the US Supreme Court, or Trent Lott's fall from grace when he uttered his ill-conceived remarks about Strom Thurmond a few years ago. Then in the top tier, not surprisingly, is disaster news. Katrina, the San Francisco earthquake of 1989. Americans are drawn to stories of that type. But also in the top tier is what the Pew Research Center called money news. stories about Main Street things like the price of gasoline and Wall Street things like the sharp drop in the stock market in 1987. The Research Center also looked at how much coverage was being given to the stories in each of these categories. And when they compared the emphasis that the media, and this is front page, top of the newscast type of coverage, when they compared the amount of coverage to the level of interest in that coverage, the greatest coverage deficit, the supply deficit, was highest for money news. Relative to the public's interest, there was less of that news than in any other category. So let me start with that question. As you see it, do the media, news media, the mainstream media, are they undercovering many of these money topics that?
When did they do that poll?
This was over 20 years, and it was just released maybe 6 weeks ago at the most.
Because certainly I see in mainstream media, which I came up in, the news weeklies have greatly reduced what they do for business coverage. The Washington Post business coverage barely exists anymore. Thank God for the New York Times, which still has fabulous business coverage. But the Wall Street Journal is terrific. The Financial Times has come up. Lots of Business Week magazines. But I think what this poll was probably missing, and that's why I asked about the time, is when they did it, is the extent to which this is migrated to the web. If you're just looking at what the newspapers are doing, you are missing what is happening with business coverage, especially investor coverage, but also personal finance coverage. CNN Money, MarketWatch.com, TheStreet.com. Business news is all over the web. And that's where people, I think, these days are primarily going to find their money stories. So although you don't see it when you look at old-fashioned journalism of the kind I came up in, you start looking on the web and it is everywhere. So I disagree with the idea that there is a supply deficit. It's just that, old folks like me aren't looking in the right place.
Although I think the internet also speaks to demand. I mean, that there is a public demand.
Yeah, but this is why sort of my argument is that it is there. Mm-hmm. It's just, not in the Washington Post anymore, which is too bad for the Post, but very good for Forbes.com.
My suspicion is that the pollsters have encountered people answering questions to some extent the way they think they should answer them. The success of People magazine and many imitators makes me suspect that there is, in fact, some interest in celebrity news, right, even if one does not think that a nice thing to tell a pollster.
I subscribe to People.
I'm one of the people who, in fact, doesn't pay any attention to that news and tend to find myself in a horrible position of not knowing who Nicole is when I see headlines. But I think we cover business news so much better and so much more thoroughly, and economic news, than we did when I broke into this business many years ago. And Jane is right. The highlight of that probably was a few years ago. The newspaper industry certainly is suffering greatly economically now, and they are cutting most everywhere. And this has been a prime cutback at papers around the country. My paper has resisted that trend, and Wall Street hates my publisher for it. And I don't know how long he's going to hold out. But I think the coverage is certainly a lot better than it used to be.
I think this was less about the quality of the coverage, I think, than it was about the quantity of the coverage. Essentially, the conclusion of the study was that when these stories do break, you do have an attentive audience.
Absolutely.
But there aren't that many of them relative to some other areas. I mean, we get lots of daily reports out of D.C., the routines, the workings of government and the like. But from the viewpoint of an economist, I mean, are there kind of stories out there that don't get told very often and or need to be told in different ways?
Well, I guess, the starting point, I think, is that you're absolutely right. I mean, there's the plethora of information about how to manage your money, how to make personal investment decisions. It's just absolutely remarkable. And in some sense, that is certainly one big story, that information is out there. And the web just happens to be the perfect vehicle for disseminating it, because you have people who are sitting down trying to make investment decisions, and the web is exactly where...
And in bookstores, it's a huge fraction of the,
For
of
sure,
the shelf
for
space.
sure. Right.
And newspapers
More
are
than the rest.
ill-equipped for it. The question of how to choose a mutual fund is, the answer today is not very different from the answer 6 months ago.
Absolutely.
Or 20 years ago. Vanguard.
And, you know, so it's like the New York Times used to run a column every Thursday on fixing up your house. You know, today we have a story about how to repair cement steps. Well, it was collected into a fine book, but it wasn't very useful every Thursday, I don't think.
For sure, for sure. I mean, the other question is whether or not actually there's enough investigative journalism going on, whether or not there are enough news stories are being dug up, and it's hard to know what exactly is the right answer to that. It is certainly clear that once you have a crisis, once you have an event, then there is a flow, and I don't think, you know, you can't complain that after the subprime crisis hit that there hasn't been enough ink that has been spilled on it. There is a question about why there was so little ink spilled on subprime prior to, say, December 8, 2006, where I noticed the Times actually had 2 stories in 2006 prior to December 8 that included the words subprime lending, one of which was actually a story about Michael Jackson and how much he was paying on his rates, that just had the search on it. Which is not, you know, it's not any different. Trust me, it's certainly no different in the Globe or no different in anything else. But the tendency to follow rather than to investigate is absolutely there. But this is also reflecting the limitations of resources, and it's not. It's hard to know what the socially optimal level is on this.
I agree with actually the points that each of the previous speakers have made. I mean, I do think far more people are interested in Tom Cruise than is showing up in those statistics. This is one place where I basically expect the market. I do think the market works in terms of quantity anyway. That the people who are interested in economic and financial news will get it. And if American newspapers don't supply it, that partly explains the tremendous growth of the Financial Times and the Economist in the United States, although you do have to be willing to read about other countries, or at least page past them to get to the part about the United States to do that. But I've got more to say, really, about the quality issue and about are there stories that are not being told, that are not being focused on enough. On the latter, I have in mind sort of what Ed is saying. I've been surprised how much reporting during the subprime crisis has taken the tenor of everybody was to blame. The borrowers were foolish because they borrowed too much. The lenders were unscrupulous. The regulators were asleep, and everybody missed it. And you know, no one saw this coming, and everyone's to blame. Everyone I know saw it coming. I mean, all my economist colleagues thought that people were borrowing money under new terms, in many cases, new kinds of mortgages, that you know, teaser rates and lower no down payments and all the rest of it, that they could only pay off if housing prices continued to go up at the same rate that they had gone up in the past, and interest rates had stayed as low as they were 4 years ago, and neither of those things were likely to happen. And it was completely predictable and widely predicted. But it's very hard to say in public, and Jane, I guess, says she says it, and I said it, and I know there were 2 articles in the New York Times that said it, but very, very hard to say there are too many Americans owning their own homes. You can't say that. People think you're nuts. But it was true. And now lots of people believe it, but you couldn't get into the paper saying that ahead of time.
The part we didn't know, because certainly during this last 2-year period prior to this, I mean, I wrote the column. Everybody in my business was writing the column saying these mortgages are insane, these 228s, exploding mortgages, we called them. I mean, you saw, you know, advice, you know what, smallest common coin. So nobody was paying attention to it because they still wanted it, but it was certainly plenty around. The part that we didn't know and that you needed to start having things explode to find out was the way these CDOs and, you know, loan agreements and whatnot were involved in banks, were involved internationally, were involved globally. There you start getting into a slightly different area where even Wall Street wasn't sure what the value of these things were. They were having difficulty valuing them. And so if it had just been a fact that some people were having trouble with foreclosure and the market was going down, that would be considered the housing market, that would be considered a normal cycle. What has made this so difficult is discovering that all these AAA securities that we thought were AAA securities are now in all of these global banks, and they can't pay their counterparties, and this and this and this. This kind of thing, and I don't care how good an investigative journalist you are, you can't find this out until it starts to happen. It
Well,
just is
I
very
think
difficult
we
to
could have
do.
I could have done a better job of understanding the way the new financial system had evolved. But I disagree with you on the everyone saw this coming. There were lots of printed forecasts that house prices have to fall, that, as Jane says, the mortgages are insane. But what nobody, to my knowledge, had any idea was the way it was going to unravel. And of course, the timing is always an issue because I've written columns, and in '99 I was writing columns about how absurd the stock market was, and eventually I got tired of writing them. People mocked me, and I was always wrong. These are, the timing of this was not clear. And moreover, I've talked to a lot of economists and a lot of central banker types, and none of them foresaw the way this would unravel or the impact it would have. Today, Moody's put out a press release downgrading 6 Pakistan banks. Now, the argument of why these banks are going to be in trouble runs like this. There's a worldwide credit crunch brought on by the subprime crisis. They're not going to be able to roll over their deposits. They're going to have to pull loans, and we're going to have a recession in Kazakhstan, and they've lent too much to the property sector there anyway. Explain that to somebody in that country, that they're losing their job because stupid mortgages were handed out in this country.
And that's part of the thing that you can't find out until it starts to happen. And we've had these kinds of issues when other bubbles blew up, when the stock market bubble blew up, when we had portfolio insurance in 1987, everything was supposed to work. And until it crashed and the water went down, you just didn't know what was at the bottom of the cesspool. And then it starts to show up. And I don't think that journalists can figure that out. Even if you talk to people and say, oh, this is going here, and this is a derivative, and but how do you know who owns what and what it's worth and how it unravels?
Just to be clear on this, I mean, I completely agree with you. I was like many people, I was completely aware that there were crazy mortgages that were being lent out. I was on CNBC actually, and I never predict price forecasts, but predicting that a major price correction in the housing market. But I had no idea that this thing was going to have the level of magnitude that it had.
So just let me clarify. There was genuine news in these events, and sure, no one knew that it would show up in German banks and Northern Rock, and there's the run on the bank in the UK, and there were specifics that really were completely unpredictable, not as far as I know, not predicted by anyone. And as you say, the failure of portfolio insurance in the stock market crash of '87 is another good example. But I'm talking about a situation where I and almost everyone I know believes, like in the year 2000, that the stock market is way overvalued, or in the year 1985 that the dollar is way undervalued, or 1995 that it's way dollar overvalued 85, undervalued 95, and housing in this case. Now the way it plays out has got all kinds of, the next is a couple of extra steps that of course deserves to be reported on and could not have been predicted. But there's a huge component of it that I think was under-predicted ahead of time.
Well, predictions.
Let me
It's always terrific in hindsight. Right?
let me
Talking about things that didn't get reported, and you too.
Let me add another angle on this. It's a really old book, but it's a great book, Walter Lippmann's Public Opinion, when he talks about basically what the press can and cannot do. And his argument is that the press, ahead of events, is no better than essentially the organs of record, the kind of information that they have access to, and in fact will lag those because journalists don't have that kind of expertise. And he also makes the point, and that what the news is about is what happened today. And so the stock market takes a big dip today, you know exactly that that's going to be a headline tomorrow, which is different from kind of really tracking the stock market and doing analysis of the market and somehow working that into the front page. So I think one could reasonably say that the journalist's job begins at the point where the problem is known. So take one of these examples and sort of how good is the follow-up then? If we can't really expect the press to be out ahead other institutions on these things. How good are they in essentially illuminating and informing the public after one of these things happens?
Floyd, why do you want to start that?
Well, I think you're letting us off too easy with your question. In
Except
this
you can take
case-
the question however you like, Floyd. That's the
In this case, I have prided myself on understanding the financial system in this country. And all these changes took place while I was busy doing other things. I didn't understand what a SIV was. I didn't know there was such a thing as a SIV. For those of you who haven't been following that, that's a structured investment vehicle, which may yet bring down Citibank. And I didn't, and I knew there were CDOs, and I sort of understood them, but I didn't completely. What we developed, which was remarkable, and I did not understand this at all, was a system where very risky loans, whether it's subprime loans, whether it's junk loans to companies, were largely financed by people who thought they were making perfectly safe investments, because they structured them so 80% of the money going into incredibly risky loans got a AAA rating and was deemed to be perfectly safe, and money market funds were buying this product. And the fact that was going on, I never read and I never wrote, and we should have. Since it's blown up, I think the press has done a reasonably good job of understanding what's going on and communicating it.
Well, now we're going
But,
to
of
switch
course,
places
that's speaking
because I
for
think
myself.
I think that, I mean, if for people who don't know, he follows these things better than anyone else in the probably American journalism, and we didn't know a lot of this stuff ahead of time. So that we're now switching places. I think that part was hard to know ahead of time.
Well, the reason why it was hard, I mean, it's obviously it's hard to know because we all could have made billions by shorting these things if, in fact, we knew them ahead of time, right? I mean, it's a...
No, but it's
No.
different. But the stock
No.
market, the stock market overvalued in 2000.
If you shorted tech stocks, when I first started writing, they were ridiculously overvalued. You would have been bankrupted long
But
before.
here's part of the problem.
The
and I-
CDOs actually you could have made money on if you would.
But I'd like to talk about short-termism in general, which I don't blame on the media just because it's part of the whole of financial markets and all of society. But I think it does show up in lots of different ways. And one of them is, why is it if Ed and I and all our friends and you two probably also believe the stock market is way overvalued in 1999, 2000, 2001, or the dollar way undervalued in 95, or the euro way undervalued in 2002? Why is it that that viewpoint isn't put out in the press enough that people act on it? It is because if you sell short in the markets, or you write a column saying this, you're not going to be right the first month. You're not going to be right the second month. You might not even be right the second year. These are things that take 2 or 3 years to correct themselves, and that is a time frame that journalism really isn't interested in and can't deal with.
Let me point out on one thing with real estate. There was an interesting tax law that made it easier for people to bet against real estate. It used to be the tax law in this country was that you could roll over your profit on a house when you sold it, as long as you bought another house within 2 years. So that meant if you thought prices were overvalued and you decided to sell and rent, you've got a 2-year time clock ticking. And you're going to pay a big tax bill if that clock expires. Well, they changed the law a few years ago, and now, you don't pay taxes on a certain amount of profits on your home, and it doesn't matter what you do with the money. And so the result was, I do know people who rented under that law, and presumably now are going to be in a position to profit from it. We'll see.
Maybe.
Yeah, maybe.
Depending on when they sold.
But the
when they
difference between
buy.
real estate, of course, and tech stocks is that none of us had to be in the tech stock market. Some people felt a great need to be as they saw their friends getting rich. But we all have to be in the real estate market to some extent. Nobody wants to sleep outdoors, or at least people of my age don't. And, you can rent or you can buy, but you've got to have a house or an apartment or something. And so that forced people, and then there's the other thing, all right, so you say prices are overvalued. Well, you said it last year, prices are up 20%. Thanks a lot. I'm glad I listened to you then.
But there's another issue here, as I think investors, since we've gone through some of these cycles, and one after another pretty recently, because you're specifically talking about the thing, well, you say, I think the market's overvalued, but it takes 2 or 3 years, and people have gotten burned and burned. A lot of money has been lost. And so individual investors have simply changed the way they've done it, because you cannot time the market. You do not know when this is going to happen. You don't know. A market can go down and your stock can go up, or vice versa. So you've had a whole new perception of how people are investing in terms of asset allocation. There should be so much percent in stocks, so much percent in bonds. We're going to do it with mutual funds. We're going to do it with index funds. And so I would say that as a result of what people have gone through in terms of losses and gains and being scared and all this sort of thing, that the whole kind of attitude toward investing has completely changed. So it's not, I mean, obviously.
I'm glad to hear it.
Yeah,
It took a long time.
Young people come up and they are always going to try to game and play. The stock market's like a video game. So you lose some money when you're young, and then the older you get, the more you go on to these other ideas.
Remember day
this
trading?
is in fact a better way of doing it. So there's been a big change, and so you can't really talk about short-termism, I think, in terms of the investing paradigm now. People are doing dumb things, but the paradigm is better.
I can't think, I'm just listening to this, I can't imagine that it's a reasonable expectation of the media that they should be able to accurately predict price changes.
Yeah, no.
But actually, that just feels like saying whether or not the price of an asset is too high or too low relative to the market cannot be
I
a
think it-
reasonable
Forget the
expectation
media,
of
your stockbroker, it's the
newspapers.
same
It is a
thing.
reasonable expectation that the Times explains what exactly this CDO is that's carrying a AAA rating, and how somehow or other they took this mixture of awful securities and sliced and diced them in some way to come up with a triple. That is a reasonable expectation for Lou Uchitel to go out and figure out. But it's not a reasonable expectation for him to say that then, well, given this thing is priced way too high.
But it is also, though, at least in the personal finance press, a reasonable expectation that I and my colleagues should say, given what we know, how can we help people deal with it better and come up with the sort of thing that I just talked about.
We're talking primarily about the press kind of as a warning system around personal finance issues. There are also these issues out there that really, where the collective interest is a big part of it. And maybe it was a pretty weak case in which to kind of enter into the issue, but the Bush proposal on Social Security and dealing with the Social Security problem. And Clinton repeatedly would have taken it on had it not been for the Monica problem late in his presidency. But here's an issue that somewhere down the road, the society's going to have to deal with. But if you look at the press coverage, there's not hardly a mention at all. I mean, the debate on Tuesday night, it popped up in the Democratic debate on Tuesday night. The front page New York Times story gave it one sentence to it, and the sentence was essentially, Obama attacked Clinton on Social Security. End of reference. Not what he said about it, where her deficiency was. I mean, almost nothing about that particular issue. And that to me seems to be more the problem, is that these are people are kind of going to look after their personal finances, for better or worse, in a certain sense. And I do think the internet's terrific in that way, and you can track things down, maybe advance yourself economically that way. But there's also this set of issues out there in which we have a collective interest. And there I do see a supply deficit.
Yeah,
It
but
seems to me
And short-termism.
the claim Social Security is in deep trouble is overstated badly.
Yes.
The claim
Yes.
that Medicare is in deep trouble is not overstated badly.
Understated.
Well,
Medicare
but the question is,
problem.
why isn't that a story?
But
Well, and it's been written numerous times.
Over and over
It's
and over.
politically charged, of course. Social Security was sold as a pension plan in the Roosevelt administration. It was not a pension plan. And people who attack Social Security, certainly as Bush did in 2000, choose to criticize it as if it were a pension plan. And of course it's not. Social Security generally consists of taxing the working and paying the money to the retired and the disabled. Obviously, that's not necessarily a great deal for those who are now working. But the fixes needed for Social Security are really not that huge.
Yes.
The Medicare problem, the principal problem with Medicare is that healthcare costs are rising so rapidly, and this society has no way to deal with it. And that's not a business topic. That, I mean, it certainly relates to a business topic, and it relates to economics, but it's far greater stuff than that. It's partially that the notion of rationing health care in any way, by price or any other means, is offensive to people on an instinctive basis. Why shouldn't my kid get the best possible treatment available anywhere in the world? Well, of course he should. Should he get the best education available anywhere in the world? The same education that, would cost somebody $1 million? Well, maybe not, but we don't think that for healthcare.
I have to say something about Social Security, though. At the time that Bush was doing the whole privatization thing on Social Security, there were stories everywhere. There were long-term, there were studies, there were arguments, there were debates. I mean, at the time that it was an active political issue, you could read about Social Security up the wazoo. You could get sick of reading about Social Security. And now it will come back, but as Floyd said, I agree with Floyd. First, the fix is very simple, a little adjustment on benefits, a little increase in taxes, and it is probably the single regressive tax that the American public will accept. Another quarter point or whatever on your payroll tax. This is something that could actually be sold at such time that the political situation is okay and wants to sell it. But I sort of disagree with the premise that somehow this has not been covered. This comes up again as an issue. I've got my studies up like this that came up, and it was all over the press. Medicare and the healthcare thing. This, as Floyd said, this is a very difficult thing to deal with, and this is a huge social policy issue. We are sort of eating our seed corn and using it up, and the boomer generation is, taking advantage of all the taxes, and they're not going to leave anything behind them.
And enjoying it.
But this is a social issue, and my God, it gets, we were talking about with the press, it gets covered everywhere.
There actually have been some very nice
story.
studies of these kinds of issues, and both the Social Security issue, the Clinton Healthcare Initiative in the early 90s. The press, in fact, does weigh in on the substance of the issue for about 2 weeks or so in the early going. And then it gets to be kind of who's up, who's down, who's winning, who's losing this battle. And there's been a consistent pattern. You can almost predict as it kind of tips over.
Well,
and then the question becomes
that's the
not what's
Washington
this.
press corps. And
Well, but the
let me
Washington
tell
Press.
you early on, you mentioned, the first thing you mentioned was the Pew polls about the people care about this stuff more than the press admits. On Social Security, that poll is right. In the 90s, I wrote a column on Social Security that ran in the Sunday Times, basically arguing what I argued a minute ago, that it wasn't really a pension plan. The Sunday Times printed a full page of letters denouncing me. And I went to the editor and said, can't you print one saying I'm not that horrible? And he said, we didn't get any. This really, and that's the perception, of course. Hillary is apparently ducking questions on this. I didn't see the debate, and I haven't read the transcript. Because it's widely viewed as the third rail of American politics. Those of you who aren't from New York, the third rail of the subway is what will electrocute you if you manage to go down there and touch it. Politicians are scared of it, and, for good reason.
And it's the sort of thing you deal with after the campaign. It's not that it doesn't go away, and it just doesn't get dealt with during the campaign. And I think that I would argue with any premise that says that Americans don't know it's in trouble, have never heard of it, and don't know what the problem is. I think everybody knows what the problem is.
I think it is very hard to accuse the press of short-termism, given that they almost surely have a longer horizon than almost all Americans who are actually reading them. Right? I think this is part of this problem, right? That the press is not an independent actor that's benignly giving its preferences on the world. It's responding to the demand of consumers. And when you're thinking about something like Medicare or Social Security reform, which is years or decades, in a way, it is an enormously hard pull to get people to be that excited unless you attack their precious Social Security promise that's being taken away from them. And I think this is, again, I think this is absolutely crucial when we think about the press, right? It is that we can't buy into this notion that the press is somehow this heroic agent that is somehow or other free from all the weaknesses that exist in every other part of humanity. I mean, it's functioning, I think, pretty well relative to most of the other institutions that we have. It's not perfect, but it's I think, on net, one of the more helpful things we have.
Well, Lippmann's argument on this point is it's not to promote the heroic thing, but in fact to say that it's actually deeply handicapped when it comes to looking out, and that if you're expecting it to do that, you've got your expectations misplaced.
But you see, I think the press is actually a lot better than it was in Lippmann's day. That sort of goes to what
For sure.
Floyd is saying
For
about
sure,
how much
for
better
sure.
we're covering the business news and whatnot. I mean, you go back, I've got stacks of 19th century newspapers, and you're studying them, and you know what they're looking like. I mean, the way stories are covered today in terms of analysis and perspective and whatnot, you never saw that in the old days. We have better papers than he was writing about. We don't have as many of them, unfortunately, but we've got better papers.
I mean, my own pet peeve on economic issues tends to be the enormous strength of human interest stories, which is clearly customer driven, right? There's no sense in which you're not appealing to customers, but you get if your story is writing over and over again about the poor lady who took out a loan and is now being forced out of her house, that gives you a very strange notion of what the subprime crisis is about, and gives you also a very strange policy recommendation about it, one that sort of tends to emphasize very strongly putting restrictions on foreclosures and doing everything to sort of redistribute more, which is, in many ways looks like a terrible
economists
mistake.
may
They not think is a particularly
do not
sensible response.
instinctively think is a good idea.
Indeed. But it's very clear why those human interest stories excite readers and appeal to people and seem...
Now, the anecdotal lead is widely valued in journalism, and much effort is put into finding it.
Yeah. Very difficult.
And that is, not our proudest moment in journalism.
Well, it wouldn't be, I mean, an anecdotal lead is one thing, but to have the whole story built around human interest or anecdotes would be worse. I mean, if it's an excuse, a way to get the reader into a story that is then a good, balanced and useful analysis, that's more understandable.
We're going to have to go out to the audience pretty soon for a Q&A, but we'd be guilty of false advertising if we didn't bring the subtitle of this panel in before we do that, and that's whether there's a substantial disjunction between what you see on the front pages, what you see in the financial or business section, and essentially whether the rules of the road are different in the two areas, and whether that's a problem in terms of the kind of messages that are going out to the public.
Do you want to elaborate on what the nature of the difference
Well, I
is? You see
mean,
it?
the business pages have often been portrayed as being, at least in part, somewhat cheerleaders for the business sector, and that the watchdog part of business journalism is not like the watchdog part of political journalism. That if you look at the front pages, they tend to be more critical, more negative, more hard-hitting.
I don't see that at all. I mean, you look at the reporting on the run-up to the Iraq War. It was all slavishly.
Well, no,
Let's speak well of business instead of badly of business. I think that may have been true 30 years ago. But God, you listen to businessmen complain; they have the exact opposite perception. I've made a career out of making, out of critical journalism. A lot of other people have. One of the really nice things about being a business journalist instead of a political journalist, and many years ago I was a political journalist, and I even, worked for a senator for a brief period. But there is an awful lot of baloney in business, and and that gets reflected in business journalism. There are a lot of PR people, but it doesn't prevail in the end. We have markets, we have businesses. Your business can have a brilliant sounding strategy, and his strategy can sound really stupid. In 5 years from now, we look around and say, he got rich and you went broke. Maybe the sounding was, but in politics, it's not like that. In politics, the baloney wins. We're going to have an election, and you'll never know, whether Al Gore would have been a better president than Bush the last 4 years. You may have a strong opinion on that, but you'll never have proof. As we do have proof in the thing I just made up where his business strategy worked and yours didn't. And I think, I don't think that, I think a lot of business coverage is is very, very hard-hitting. We've had on my paper, we have a woman named Diana Enriquez who wrote brilliant stories on how insurance companies were ripping off soldiers. This was something that was simply not on the radar screen of America until she stumbled on it and wrote wonderful stories about it. And this does go on in business. It doesn't go on every day, and we certainly, you know. So I don't think your premise is correct.
No,
Well, I should say
agree
about
with
Diana,
Floyd
we
on
gave
that.
her an award, but so you would argue that there's just as much kind of attempt to kind of peel back things in the business section on the part of the reporters there. There's as much, essentially, of an effort to get transparency into the news as you find on the political side.
I think much more so. I think, and one way to think about this is that if the demand for news goes from one side, which is entertainment, to another side, which is actually news you can use, news that's really valuable, the more that it's targeted towards news that you can use, the more accurate it is. Because those readers aren't just looking for a good story, they're looking for something that they're actually going to use their money about. And I think because business is much closer to news you can use, I think there's no question that it's harder hitting, more accurate, less covered with, you know, the romanticism of politics.
So something like Enron, lots of journalists saw that coming, and there were real efforts to kind of peel back that scheme that was
There were
going on.
puff pieces written on Enron,
now you're
not
back-
by good journalists, but they were written. And no, I didn't. I knew the games. I knew some of the games that they played at Enron, and I knew that Enron had some weird things. I never got around to writing it. But you know, we didn't see that coming. No.
But you're back in the prediction business, which is different from saying that the press is just doing puff pieces because we don't analyze.
But when you
things.
talk about transparency and hard-hitting and pushing back and watchdog journalism, and you get the sniff that maybe there's something wrong at Enron, whether someone gets on that, they're certainly going to get on it if it's in the White House.
Bethany at Fortune got
Right,
on it.
right.
So, you know, there's a lot of that out
Yeah,
there.
yeah.
And so somebody gets on it. And that was a story that helped bring Enron down. And so she did brilliant pieces in Fortune on exactly that issue. I mean, there's a lot of crooks out there, and there are fewer reporters. But the idea that we're somehow not going at it, sure, pieces get written that say, oh, you know, this is what the CEO says, and isn't this a wonderful company? But to the extent I think most of us are pretty serious-minded about that, and to the extent that we can get our hands on something, have the time and resources. This is another issue, though, that, you know, to the extent, and that goes to Ed's mentioning of investigative journalism, that, you know, as the resources shrink, you have less time to take, you know, Bethany and say, take 2 months off, don't produce anything, and see what you can find out about Enron. So that also becomes a question.
I don't see
for
that
us.
on the front page in the political section either, in the foreign policy or politics or anywhere. I mean, hard hitting, it may be that people say nasty things about politicians, but in terms of actually, you know, substantive analysis in the political sphere, I don't see that either.
And I'd say one other thing about reporting is that business journalists do have, particularly who cover companies, have a big advantage now, which they didn't used to have. You can get on the telephone when the CEO is being questioned by Wall Street analysts. Wall Street analysts are really tough and mean, and you can learn an awful lot when you're sitting in on that call. You didn't used to have that kind of access to what was going on inside a company. Now you can do it.
I disagree with you that analysts tend to be tough and mean.
Yeah, I was surprised at that.
Well,
But
No, talk about puff pieces.
the big advantage we've got to be harder hitting is that for company journalism, the SEC makes companies disclose all kinds of stuff. Carol Loomis of Fortune has made a career of reading that stuff and has had a brilliant career. There's nothing comparable in politics. Knight Ridder did some nice work leading up to the Iraq War, but it required a lot of work, and it couldn't be definitive. You know, we don't have the intelligence agencies required to disclose when they're fudging. To some extent, companies have to, and you can find stuff like that to some extent. The thing that got me suspicious about Enron was the totally impenetrable footnotes, which struck me as absurd. And, you know, something else came up and I forgot about it, which, you know, so much for that. It's easier for us in many ways because of SEC disclosures.
Well, let's go out to the audience for questions. If you have a question, please identify yourself and make sure it's a question as opposed to a statement. Robin.
I'm Robin Sproul, and I'm a Shorenstein Fellow, and I would be curious to hear from each of the panel members. We've heard so much tonight about the tea leaves that were there with the subprime mortgage scandal. What other tea leaves are you seeing about the next big scandal that's going to explode and surprise us all?
This again goes to the prediction question, right? I mean, where is the next bubble? Well, we've got commodities that have been going great guns that I think I don't know nearly as much about as I should, because people are now buying commodity funds. So somewhere in the oil, the commodities, there might be something. Do I have my finger on the pulse of that? Nope, because I don't know, I don't know what they're trading in Singapore and Pakistan, but maybe that's a place, but I don't know. Oh, and this is the thing, until something starts to crack for you, it is often very hard to predict something this way. You can say there's a bubble, but then, as we've been talking, where it works out, we don't know. Probably commodities somewhere, and it may be 10 years from now.
I think the dollar, I think the United States international position is one of those issues which is going to come to the fore in the next few years. That's one of those things where people have been forecasting problems for so long that it's been tempting to ignore the forecast because they're always wrong. But there's a tendency sometimes, I think, in journalism to, if you think X should cause Y and it fails to cause it immediately, you conclude you were wrong about X causing Y. And you may have just, had the time wrong. I think that's going to come to the fore. I think there's going to be growing protectionism. And I think sovereign funds, sovereign wealth funds, are going to become a huge issue, because what you're going to see is Chinese government effectively nationalizing American companies. Not owned by the American government like they might have been, or not owned by the French government as they were, after World War II, but owned by the Chinese government. I think that's going to become a very important issue.
And if I may just follow up on that, when you say, oh, well, gosh, the Chinese have all this money, all these dollars, they're going to dump them on the market, we'll have this terrible problem. No, they won't, because they can get real value from their dollars by buying our stuff, buying our companies. Of course, what I'm hoping we will do, as you recall, we went through this with Japan, and we sold them Rockefeller Center at a highly inflated price, and they sold it back to us at a loss. So, and Pebble Beach the same way. So,
This is, by the
there's
way,
some possibility we might be able
well, we
to.
just did it with mortgages too.
Mm-hmm.
There were a
That's
lot
true.
of foreign
We've done
buyers
with
of those
mortgages,
CDOs
yeah.
who took a real bath on this.
Yeah.
So this was also a transfer to. You
money
could see the
transfer,
whole
right.
thing as being a scheme that we had for expropriating foreign
Right.
investment.
Brilliant.
I'm going to stick with doom and gloom in the housing markets while we're at it. I mean, the basic statistical fact is that relative to national trends, relative to local trends, for every dollar a market goes up over 5 years, it loses 32 cents on that dollar over the next 5 years. That's the sort of basic fact over the past 25 years. There still is a long way to go down if you think of that fact, if you think of the incredible rise that we've had over those in so many markets. I think this is almost unimaginable that this couldn't be the case in places like Las Vegas, where there are essentially no barriers to new construction, where essentially, you can build houses from here to there and back again.
Oh, there's a barrier to new construction now. Nobody's going to finance it for
But that's a demand side. It's not a supply side barrier. that doesn't protect you from. Las Vegas is still far above construction costs, and that's got to come down. Let me just leave it at that. The one thing that I would also say, just on this point about short selling and why short selling doesn't take into account. Actually, if you know you're going to buy in 2 years, it almost always makes sense to buy to you today, because the risk involved in housing price changes is so big that actually, given any normal tolerance for risk, you should actually always front load your purchases. Even if you know it's going to drop by $20,000, you should buy today if you're sufficiently, given the riskiness of most large markets.
Please. Oh,
Tom.
excuse me, sorry, Jeff.
I mean, I've thought for the last 3 years that the markets have been underpricing risk in general, and so that means the price of options has been too low, like the VIX. It means the prices of corporate bonds, the interest rates on corporate bonds have been too low, the spreads have been too low. What we've seen over the last 6 months is a partial correction of that, but I think there's going to be a lot more. I think that securities prices in general, both stocks and bonds, will certainly not rise over the next 10 years at the rate that they have over the last 10 years, and it will probably actually go down. I think the yen is undervalued and will go up. Predictions.
Please.
Jed Schwartz. The question is whether you think that low wages in the U.S. are causing the bank write-offs and the subprime bubble popping crisis, and if so, whether you think we need a new wage distribution paradigm in this country. It's a big question.
Can I add a little footnote to that? There was a study that I read recently that looked at financial sections, business sections over the last 20 years, and found that there had been fewer and fewer stories about labor in those sections. And they've become more and more kind of pure business sections. And so if you wanted to kind of tackle either of those
Actually,
issues.
I would like to tackle, and I should answer the questioner first, but because this is something that concerns me a lot. I do think that our press, you know, we're trying to stay alive. We need advertising. Who's advertising? They're not advertising to people with modest incomes. They're advertising to people with high incomes. We've got, you know, the travel section and the this and the Newsweek is the same way. You used to have a full-time labor reporter. Now you
We
for
do.
years.
And in fact,
And now,
we've done a lot better in the last couple of years.
and
We've got a crackerjack
you
labor
actually,
reporter at the moment.
you did get a labor reporter back. That's true. But the fact is that because of this demographic switch, the kind of opinion influencing newspapers we're talking about, they are writing to an increasingly higher end audience. They are less and less interested in labor. They aren't covering these issues. And I think it is an absolute tragedy. The only stories you tend to get, everybody's either assumed to be smart and rich and going to Harvard, or they are poor, and you get poor people. So you've got poor people stories, but you don't have kind of the New York Daily News stories very much. And so that concerns me a lot. To just address what the speaker said, the questions I asked, I don't think low wages are the cause of the subprime problem. Borrowing too much, maybe misled by a mortgage broker, was the cause of people's problems.
I would raise the question whether where there is the reporting, and it does exist, on employment rates and real wages, which have stagnated in recent years. But if you look over the last 30 years, would you be able to judge from the tenor of the reporting which periods have been periods that have been good for labor and which have been bad for employment or real wages? So, I mean, just the New York Times best reporting, but there was this period of in the mid-90s when we were finally, for the first time, pulling out of a decade of stagnation of unemployment and real wages, and yet the stories kept saying it's a jobless recovery, and then it turned around the other way. In the last 6 years have been a period of completely stagnant real wages, and employment has fallen a lot as a share of the labor force. And I'm not sure people are aware that what the trends, what the broad trends have looked like, namely stagnation in the 70s and 80s, up in the 90s, down in this decade. I don't think you can get it from reading the stories.
I'm sure I can find stories that have said that. I wrote some of them. Is it prevalent? Is it dominant? No. Numbers can be manipulated as one wishes, and that's truer now than ever. Actually, on your point, when I joined the Times almost 20 years ago, they had a rule that labor stories did not run in the business section. They ran in the national section, thank you, or the metro section if it was about a local labor thing. And it took years for that rule to kind of slide away. It always struck me as ridiculous. And I think right now our labor coverage is better than it's been since I've been reading the Times. No,
You're
I don't,
right.
Well,
I
this-
don't
well,
go
but
back
this
to
was-
Abe Raskin and all those days.
Yeah, but this was not a study of the New York Times. This was a study of a cross-section of American newspapers.
Yeah, I
mean,
agree
and,
with that.
and sometimes these are
I think it's
these
true.
are at odds. Dick.
Absolutely true.
Dick.
My name is Dick Kavanaugh, and I used to be in business, but I've recently come to visit the Kennedy School. And my question is, the subprime story for 5 of the last 6 days has had as its headline in the New York Times on the front page, in the Wall Street Journal on the front page, in the Financial Times on the front page, the story of whether or not Stan O'Neill was about to be fired and whether or not Larry Fink was about to be appointed the new CEO of Merrill Lynch. Not dissimilar to a series of stories 2 weeks ago about whether Chuck Prince was about to lose his job and who might be the successor to him at Citibank. The question is, how is this different from celebrity reporting in a different realm?
It's a great point. It's exactly the flip side of the human interest stories, actually. It's the glitzy side version of the dispossessed widow from the thing. And I think it's, you know, again, it does nobody any good.
But it is what people are interested in. I mean, they're
Absolutely.
responding to
I think Stan O'Neill may have set a record for the number of times he was fired on the front page of the Times in 1 week. I don't have any data to support that, but, and I don't think anybody else has managed to eclipse it, certainly in the world of business. But as I say, I have not done the study. You know, I think your point is you know, has some validity. A lot of companies, most of Wall Street didn't have any idea this was coming. One of the great admissions from Citibank when they were, you know, suffering their problems, and they must be very grateful to Merrill now. One of the great admissions was that a lot of the stuff they've got they're losing money on, they didn't look at it from the question of will people pay them back. Their question was a market question. Since they planned to resell it in securitizations, all they were worried about was the market for reselling it. You know, and it turns out the music stopped and they're stuck with it.
But you also have to remember that, you know, Goldman didn't do this. I mean, Citibank is run by a lawyer, and Merrill was until day before yesterday run by a salesman. And when they came in to be CEOs, they were answering very serious questions. I mean, you know, Citibank had a lot of questions about what they were doing in the Treasury market and issues with the SEC. They really needed a lawyer when Prince came in. Now they need a banker. And in fact, they didn't have a banker. But these other big firms, they're run by bankers, and they managed to avoid this. But I do think that it is the classic anecdotal lead, as we're talking about leads, and as a way into the whole story about company management, how companies are managed, decisions are made. I think the whole story was pretty interesting. I would not dismiss it as just celebrity journalism. I would take a look at who is running the company. And look, they've just had this story about a lousy succession plan. They don't know what they're going to do. And these are cautionary tales for other CEOs.
It does seem to me in business reporting, like in the rest of reporting, political and all that for my taste, there's too much focus on personality and who's up and who's down and not enough on substance. But it's a response to what readers want.
Please.
Hello, my name is Andrew Stein. I think in my ideal world, there would be a lot more coverage of egregious actions by corporations, privatization of water by Coca-Cola, lawless killings by Blackwater, irresponsible lending practices. And these aren't things I think that we disagree with. We disagree with murder. We disagree with taking water away from people who need it and are poor and don't have power. So I guess my question is, why isn't these things that are about core values I think we all share covered? Because it is a kind of human interest story. And specifically say about the mortgage crisis, why wasn't first covered on, hey, 228s, 327s, these mortgages that are, people really should not be getting? Why isn't the story about, hey, there's a lot of predatory lending out there, instead of it only showing up in the pages when it starts affecting rich people with, the investment banks and the mutual funds and the pension funds.
I would say we could have done more on that, but again, I mentioned my colleague Diana years ago. She was doing exposés of predatory lending. All these things did get covered to some extent. The financial things you mentioned. You also mentioned Blackwater, which is way out of my field of expertise, although I'm reasonably sure if the head of Blackwater were here now, he would be surprised to hear us criticized for not being critical enough of his company at the moment. You know, you could say these mortgages were ridiculous. I said they were ridiculous. Jane did. A lot of other people did. Okay, you said that last week. Why say it again this week? What's new? You know, and I stopped saying it.
There's something more here. If you wanted to write the warm, fuzzy human interest story about mortgage lending, that wasn't the way it pushed you. The way it pushed you was, oh, isn't it wonderful that this family, this single mother or whatever, you know, who never thought she could afford to buy her own home is now living in her own home. Isn't that wonderful? That was the way all the politics and all the perceptions pushed you. And it turns out we weren't doing those people any favors.
No, it does. And there were government policies that we failed to focus on. A lot of this subprime lending was financed by, you know, believe it or not, by Fannie Mae and Freddie Mac, the government-sponsored enterprises. Under congressional pressure, they were told you should finance more loans to poor people. Right. Because, you know, the percentage of Americans who own their own homes is an indicator of national success.
Right, and everybody who's not an economist, as far as I know, believes that firmly.
Yeah, no, I completely agree with this, and I think certainly there was too little critical stuff ex ante. I actually think, if anything, ex post, the pendulum has swung the other way. I actually have a huge problem with even the phrase predatory lending. The idea that lending someone money, you lend someone money, you're compared to a velociraptor, you know, feels to me so wildly pejorative relative to the facts on the ground. And I want to know, where are the stories of the millions of borrowers who deceived lenders? Where are those human interest stories, which are at least as abundant?
In fact,
vast numbers
we have written stories about people who do that, but let me just tell you one story that broke today, which is absolutely mind-boggling to me. Andrew Cuomo, the New York Attorney General, is claiming that Washington Mutual, which is, I think, the biggest thrift in the country, certainly a major mortgage lender, pressured appraisers to come in with high appraisals. And if you think about this, it is completely ridiculous from your normal things. He just mentioned the idea of a borrower trying to lie to get money. Well, that makes sense to me, okay? I'm not saying it's moral and ethical, you know, but just like you're going into a bank and robbing it, makes sense to me. You're going into a bank and throwing money at them and running out, that doesn't make sense to me. And a lender trying to rig things so that it could lend money on loans that were likely to become worthless only makes sense when you realize we developed a financial system where the lenders didn't think it was going to be their problem if the loan was not paid back. And, you know, that had a problem.
And actually, predatory lending is pretty clear to me on the mortgage broker level. If you have mortgage brokers deceiving people about the terms.
If you can prove fraud, then I'm willing to call it predatory. But actually, for me, it's got to actually be a crime before you're.
I'm not willing to call it predatory, but I personally,
Okay, let's go up for a question up here on the balcony side. Please.
I may be okay on that too.
I'm Reg McKean, and I'm mindful of the fact that Tom Patterson began by reminding us about the great increase in the national debt, which makes me wonder if the borrow and spend policies of the present administration have serious dangers. And I'm an economic illiterate, basically, as I think Ed knows from the time I've spent in his office. I also would like to know if there are serious dangers with regard to the borrow and spend policies of the present administration, and whether the press has done enough to warn us about these dangers. If not, please start.
I think the press in the early years of the Bush administration was in my view, was completely negligent on a number of these stories, and now it's swung very much back the other way. But on foreign policy, on the budget deficit, I mean, before September 11th had hit, Bush had already blown the budget surplus, and that did not get widely reported. And so it was possible, years after September 11th, for the public to have the impression that what caused the recession of 2001 and what caused the surplus to turn into a deficit was September 11th, which was completely wrong. But because the press had neglected to mention it before September 11th, they got this idea. And that lasted, that helped keep Bush's popularity ratings up for years until finally we had a comparable disaster. I mean, thank God for Hurricane Katrina. As far as I'm concerned, it's the first time people started to pay attention to the competence issue.
Please.
I'm Len Ellman. It seems to me one of the great villains of the subprime fiasco are the bond rating companies, S&P, Fitch, Moody's. They were really the ones who were supposed to assess the creditworthiness of bonds, and they obviously failed miserably. And my question is, what do you think will evolve, or how can we achieve greater success in this area in the future?
They've failed every time. I don't know any of these that they've gotten right.
As it happens, I'm addressing that in the New York Times tomorrow, so I urge you to buy it. But I'll now tell you what I'm saying. We developed over the last couple of decades a parallel financial structure that was largely hidden from view, and I complained about it occasionally to no effect. The problem we're seeing right now isn't that the rating agencies got it wrong. As you pointed out, that's not unique in history. But the problem was that the data wasn't given to anyone else. You know, you don't have a crisis when Moody's comes along and downgrades some industrial company. And the reason is that the financial statements are available to everyone. Other people have probably reached the conclusion before Moody's did, and people can conclude Moody's is overreacting, which sometimes happens. But here, there seems to be very little way for even sophisticated analysts to cut through the malarkey on a lot of these securities. And we're going to have to come up, if the securitization market is going to revive, and it's just about dead now, unless there's some kind of a government guarantee. If it's going to revive, we're going to have to come up with a lot more sunlight and a lot more disclosures so that other people can look at the same data that S&P is looking at and decide whether they agree. And maybe they'll conclude S&P as being too harsh, or maybe the opposite. But they need to have that information.
Yeah, certainly my friends in this industry who are investing in these things put no faith in the ratings beforehand. I mean, there was certainly a sense in which anyone who was betting based on investing based on the ratings was not smart money. But obviously, there were a significant number of particularly institutional investors who were expected to invest in AAA securities or legally required even to invest in AAA securities. And Moody's catered to that by providing lots of stuff which had AAA on it, even though it didn't in any sense bear the risk characteristics that one would normally expect in a AAA security.
And it had a slightly higher yield than other AAAs, so your AAA fund could look better than the others.
Indeed, but I think certainly one of the I mean, what Floyd said is clearly right. But another thing that's absolutely critical is that we need more cynicism towards the rating agencies. That should have been there in 2 years ago, and hopefully it will be there going forward at least for the next 10 years till we make the same mistake again. But it's.
The question was about reform. I mean, there is an obvious problem, which is the rating agencies get paid by the bonds that they're rating, the bond companies are rating. Do we think that this kind of conflict of interest is a big part of the problem, and do we think it might get reformed now?
Well, I mean, who else is going to pay for it unless you have the government saying, okay, I'm going to set up a ratings agency, and then that's a political thing. So, I mean, the issue is who is going to pay for it. So Floyd's point that this is a black box, and you just can't have the black box anymore. You have to have the data so that you get different opinions on it.
And issuers are going to face incentives to give this information out. I mean, otherwise they're going to have a lot of trouble selling stuff, at least in the short term.
One can hope.
One can hope.
Okay, let's make this the last question. And
Taz Rajwani, MPA here at KSG. And this is actually a more back to the old subject. You mentioned that at Merrill there was a salesman and Citibank a lawyer, and Goldman, and they have bankers behind them. How do you explain companies like Countrywide Financial and IndyMac? They have CEOs, have been in the business for a very long time. What were they into predatory pricing? How do you explain them not being able to predict this crisis?
Yeah, well, they were minting money on the mortgages that they were putting out, and because they could sell them easily into the financial market, you know, I guess if I'm a CEO and I can lay off that risk and I think it's not going to come back to me, and furthermore I get a fantastic bonus based on it, that seems to me like a sensible thing that I'm going to do. And actually, also in the New York Times, we keep saying what a wonderful paper you have, Floyd. Gretchen Morgenstern wrote a wonderful story pointing out that Countrywide was making money on its foreclosures. You know, the banks all say, oh, well, we don't want to foreclose, we lose money on foreclosures. Well, Countrywide was putting on so many fees, they were making money on their foreclosures. So if you are Mozillo and sitting there and saying, I want to get my stock price up and I want to get my margins up, and I can make these loans and lay them off, and some idiot in Pakistan is going to buy them, you're going to do that.
Another thing, though, that one of the other things Gretchen pointed out was that Countrywide was advertising how many loans it worked with the borrower to avoid foreclosure. And it turned out that a significant percentage of them, we avoided foreclosure by having the person sign over his home before the foreclosure proceeding proceeded, yeah. Which is clearly, you know, a great stride forward. But, you know, the thing about mortgage, the thing about the lending that got overlooked in recent years by the financial types, there are two things necessary to happen before you will default on the mortgage. The first thing, I'm assuming we're not having fraud here by the borrower, which did happen, but the first thing is you got to be unable to meet your payments. And the second thing is you got to be unable to refinance the loan or sell the house. When property prices were soaring, the first part didn't matter. And so they looked at their data and they said, well, look, we had no losses on these loans to these risky borrowers. Obviously, the risk isn't really there. And, you know, surprise, it turned out when property prices stopped going up, the risk was there. I would also say, and Jane, I thought, had a nice line, but the history of American banking does show that bankers can do really stupid things too. It's not just lawyers and salesmen.
Well, I'd like to thank Jane Bryant Quinn, Floyd Norris, Ed Glazer, Jeff Frankel, and all of you for sitting through this financial reporting forum. Thank you very much.